Greetings, members, one and all of the Salivation Nation. Silver premiums are dropping, at least for now, until the next whale of a squeeze. Stay tuned and I'll tell you what I mean. Let's explore! Indeed, when you hold on to your silver, sometimes it is nice just to kind of squeeze it a bit, to hold on to it tight. And you may remember, it wasn't that long ago, just over a year ago, we had a silver squeeze that in fact did, for a brief amount of time, push the prices up a little bit. Although it pales in comparison to the price movement that we see in silver because of industrial demand, one way or the other, or just the mere fact that the dollar has strength or not. I'm going to be referencing an article here by investingnews.com about silver's 2022 price path, with this wild card demand factor to watch that could essentially lead to that. And we'll talk about that in a moment. First, I'm going to talk about an article here from the lbma.org. Yes, the one organization we all love to hate. There's kind of an interesting article here about silver's path here for 2022, and even talks about the social media frenzy called the short squeeze by promoting silver ETF purchases that would theoretically cause a supply shortage and push prices up. And not only was it that, but also it was physical demand as well. Although the failed short squeeze had a short-term impact on prices, some of the largest daily gains, up to 9% in more than a decade, were reported during the first days of February 2021. A more significant outcome was putting silver back on the map for investors. This was reflected by an increase of nearly 70 million ounces in the total silver ETF holdings during the first quarter of 2021 alone, and an uptick on exchange volume by 22% later on year on year. Last year represented a fascinating year for silver as both demand and supply recovered to pre-pandemic levels. Mined silver output grew the most in Latin American countries where governmental restrictions due to COVID during 2020 fell the hardest, mainly in Peru and Mexico. The largest production gains soared as byproducts from copper operations, which grew by a substantial 9%, while primary silver output increased by nearly 2%. The reopening of economies resulted in a strong rebound in physical demand, which increased by nearly 13%, driven by the retail investment sector, from which demand was the highest in 6 years. And by the way, there's still supply chain problems here, but we can see exactly in this chart with three different factors that are being here. This chart really tells us a whole lot here. The supply of silver has been relatively constant in regards compared to the other two factors here, which is quite revealing. And so you have the silver price. And if you look here where the silver prices has been since about 2014, it's been relatively stagnant. In fact, we look here in 2020, there's that huge plunge in the silver price for a brief moment of time. But look where it has been since about 2014, mid-2014 up to 2020. Relatively flat, not a lot of activity. We had spots where it barely went up over $20. 2016 is a prime example. But from the pandemic, from late 2020 all the way up, or mid-2020, all the way up, it has been well above $20. Of course, now it's barely above $20, but it still is above $20 an ounce. That seems to be the kind of the new floor here, according to this chart. And then we look at demand. Even though demand fell, which is ironic here, that demand includes industrial demand. And throughout 2020, it was very low. And it's now picked back up, but the demand still is not where it was in 2015, which is where it was its highest over the course since 2010 here. But look at this, demand up, prices down. Demand and supply was up. Demand exceeded supply here, and prices were down. Here, demand was down, supply was up, prices up. Go figure. Because this you might be able to blame on price suppression, but can you blame this on price suppression here? Just some food for thought. Silver mine production increased to 853.3 million ounces in 2021, representing a 3% year-on-year increase. At a regional level, the largest increase was reported in Latin America, especially in Mexico, Peru, and Argentina, where COVID restrictions in 2020 impacted production levels. Silver output in Mexico, the world's largest producer, increased by 10 million ounces, or by 6%, and Peru increased by nearly 16%. Silver hedging, the hedge book increased by 9.8 million ounces during 2020 as companies aim to lock in favorable silver prices. The increase represented the second consecutive year that the global hedge book has been expanded. May be happening again this year. We'll talk about that in a moment. Physical demand increased by 13% to 1,037.2 million ounces in 2021, driven by a rise in fabrication demand across all the major sectors. While jewelry and silverware fell short to equal the pre-pandemic level, it was industrial and retail investment demand that surpassed the pre-pandemic level. The photovoltaic sector was a key contributor to the rise in the industrial demand, which benefited from a strong growth in the clean energy sector. And this is an interesting chart. Lead zinc mines are the largest source of silver as a byproduct. Look at that. Lead zinc. From Reventive Metals Research is where this information comes from. Fascinating indeed. There's where that is. Investment demand in the form of coins and bars increased by 21% to 249.1 million ounces, which was the highest since 2015, although fell short. Historically, silver is the second instrument in the precious metals basket that carries monetary value after gold. Investors bought silver to address the growing concern of negative real interest rates and rising inflation. The Silver Squeeze social media campaign also played a major role in pushing investment demand higher. And that could happen again, folks. Exchange-traded products enjoyed another year of inflow, although this time it was only 27.5 million ounces, the lowest in 3 years. Investors offloaded 48.7 million ounces in the month of December, dragging the inflow lower than previously estimated. So what is our outlook for the rest of the year? Challenging year for jewelry and silverware fabrication. Elevated price is a major headwind, and until the price comes down by at least 10%, demand will not revive. In a key market such as India, the observation is strong demand for the first 2 months. Demand has now mostly dried up due to the extreme high price. China, at the same time, is also battling with another wave of the pandemic. Strict lockdown measures have already impacted retail consumption. And I've known several people close to me who have gotten COVID. So it's still out there. At least, it's not being talked about, but it's still out there. It's not politically expedient to talk about, I guess, these days. Investment demand in the form of coins and bars may grow at a steady rate, since factors have influenced this sector to grow in 2021 are still very much in play. One must remain cautious on the ETP side. There's a risk that professional investors might offload some of their silver holdings once the crisis subsides. Current holdings are enough to meet nearly a year's physical demand, which represents a significant overhang for the market. That is interesting when you look at that, especially the amount of paper products compared to the physical. On the industrial segment, we may witness negative growth this year on high inflation and slowing economic growth. These two factors are likely to negatively impact demand ranging from consumer electronics to automobiles and housing. And so there it is. Then it gets into mining supply, and we won't touch too much on that. But look at the gold-silver ratio. It's been higher than the historic ratio since 2014, we can see here. And there's a wide gap there between silver and gold price. And so silver has lost substantial ground since the Federal Reserve raised the interest rates to contain inflation. Higher interest rates have helped the U.S. dollar strengthen against a basket of currencies comprising the dollar index, while the benchmark 10-year U.S. Treasury yield soared to a multi-year high, putting pressure on precious metals. The Fed is expected to continue raising rates, and it means that investors will chase yield by discarding non-yielding assets such as silver or gold. However, we expect the Russia-Ukraine crisis will continue to act as a resistance to the downside. The price may drop to $19 an ounce this year, the LBMA says here. Well, we believe this year's high has already been hit. And by the way, when I say LBMA, this is from this research group here, Refinitiv, that is making this proposition here. The gold-silver ratio, which tends to divide analysts regarding its usefulness in forecasting silver pricing, remains higher than the 40-year average of around 66. Currently stands now well above 83 as of the recording of this video. Historically, although there have been several exceptions, this ratio has tended to increase during bear markets and decrease during bull markets. That's very true, but they believe the gap will increase during the remainder of 2022. However, things could change in terms of the price and the premiums that we're paying for silver. And there's a really good interview by this guy, Peter Krauth of Silver Stock Investor. Now, he's pretty much a silver bull, but he's been pretty realistic about silver for this year. But he has a long-term price target of $300 per ounce. And so when he made this interview here, he thinks that a realistic move for silver this year would be to at least $25 or a little bit north of $25. So he is actually even more cautious than my prediction for this year, which is $29. Industrial demand will create a key price floor, while investment demand will be less predictable. I think investment demand is going to be kind of the wild card that could really push silver much higher. People are going to get excited about gold, and they're going to look for an alternative, because gold's price will go up and be unobtainium for some, but silver will be affordable. And you might see these premiums drop, at least for now, as people aren't as excited. As I mentioned in a recent video, they're kind of silent and people aren't buying as much. Premiums are coming down. That's at least for now. Now, until the next whale of a squeeze. Now, what do I mean by that? Well, we could have another silver squeeze where people say, hey, this is the opportunity to buy, and we're going to see people buy en masse. And I'm not talking about maybe a whole lot of people buying a lot. I'm talking about a whole lot of people buying a little bit. Kind of like the silver squeeze movement in the physical space, and that could cause the premiums to go up again. But I think what could really cause the premiums to skyrocket are these whales that are out there. I have from a source, and this is an unnamed source. Whenever somebody tells you there's an unnamed source, you have to always question the validity of it. I'm giving you this information because I trust the person who gave it to me. Although I don't want to name him either in case it's wrong. But he has it on good authority that there's going to be a whale that is going to make a large purchase from a particular bullion dealer, enough that it could potentially rock the markets, at least the between bullion dealers. In other words, bullion dealers may say, hey, we unloaded this many thousands of ounces, which would equate to a certain contract size from one individual. What are you seeing over there? So it could have an effect there for inventory, which could have an effect on premiums. And that's just it. I know of another dealer. This is on very good authority from Monument Metals, that they are going to be getting a selection of a pretty healthy supply of Canadian maple leafs with the lowest premium that they've offered for them in a number of years. And that will be over Monument Metals. As of the recording of this video, it's not available yet, but you can check there very, very soon in the next day or two to look for that deal for Canadian maple leafs, which have about the second highest premium right now behind Silver Eagles. Very popular bullion coin, and they're going to be having 2022 silver maples for a good deal. But the best deal for silver has been kilo size and 10-ounce size bars. And that has been the best deals that I've been seeing. And if you've been following my channel, you've seen them on my channel. But those premiums could increase as well as those if you have a whale or two that come in and do these squeezes with already relatively high demand. And the demand has been waning. If we see it squeeze up again, and there's you go, you're going to see premiums go up again for sure. So there you have it. Let me know what your thoughts are in the comment section below. I think it's a good idea to take advantage of these deals while they are there. And I have done it. I know others have done it in this community as well. Let me know what your thoughts are. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.